This video gives us a brief market review of the activity on 4 different data feeds for January the 12th, 2015. But what we have on the chart here is a composite market profile of the volume activity that existed at the close of Friday, January the 9th, 2015. We've also placed on each of these charts both the high and the low marked in a horizontal red line. So we have these profiles on the ES, the INX, the INDU, the YM, and you can look at where the market found resistance and where it eventually found support for a rally up. As the market moved down, in every single instance, the areas of low volume represented by these areas in white on the chart. These were areas where next to nothing in the way of volume took place. You've seen us draw your attention to these issues in the past. You've got it on the ES, you've got it on the Dow, you've got it on the INX, and you got it on the YM. And in every single instance, that first area of low, next to nothing volume, all got filled up during the course of the day. Significant is how the market rallied up to an area of resistance. Now, all it takes is a little bit of logic in order to understand why this occurred and why the market shorted. And all you have to do is just think about it. As the market moves up, okay, the market will move higher so long as it has buying. It will stop moving up when it reaches a level where there is little buying going on. Now, where is that going to be? When you look at a profile chart, you're able to see where the area of low volume is. In other words, where the area of little buying was. So in the past, in this area above 43.75 roughly here, you had very little volume comparatively to the areas prior to that, to the prices below that. So as the market moves up, it's finding less and less and less support for additional buying. Or in other words, it's finding more and more resistance to buying. Because in the past there wasn't very much buying at these levels. So when you compare the same idea to the other markets, you see the same thing happening on the Dow. The Dow is moving up into less and less and less of an area of supportive buying. Same is true on the INX. It moved below, it moved above the point of control here, down into the area of lower volume, but as it moves down in this direction, it finds less and less support for additional buying, hence resistance. Everything really is resistance to more buying. And then finally, on the YM, the same is true. We move down this graph, you have less and less and less buying going on. And then right before it reaches the area of the least volume, enough is enough, and you see the market reverse. As it reverses, in each of these instances, it either went down below the lower value area here, the point of control here, point of control here, and the low value area there. But worse than that, it went almost down to the low value area here on the Dow after having moved directly through a 100-point drop where there was next to nothing in the way of volume. And the same on the ES. Knowing that information, one could have easily anticipated that this market is going to move down rapidly to fill in this area. And that is exactly what happened on each one of these 4 data feeds. Finally, the area of support took place just above the low value area on the Dow. And you can see on the INX here, before it moved down into the next area of low volume, it finally found support. And this chart doesn't go far enough to plot that. So having this data available makes a huge difference. So now let's look at what the chart appears to be at the close on January the 15th. So now notice we put horizontal lines above and below the area of very, very low volume. So here's roughly a 12-point move down. Pardon me, an 8-point move down. Here you're dropping from 686 to 591, 38 down to 29, and here at 603 down to 539. Now watch what happens when we move this forward and see how the market filled up those areas between these 2 yellow horizontal lines. And there you have it. The ES filled up this area quite nicely. The Dow filled it up completely. The INX considerably. And the YM abundantly. That's what happens. So you have to be able to keep a record of what's going on so that you can detect this. Now, what should you be able to detect from what happened today? We still get an area of very low volume down here at 2015. Now, if we move the chart sufficiently enough, we'll be able to see whether that's an issue. But to keep track of what's happening is an important part of the technical analysis that needs to take place. Because as you can see, we've got low volume down here from the most recent past. On the INX, nothing below 2011. And then we get into another area of low volume on the YM over here. So this looks to be like a very volatile next few days, just on the basis of what we see in the charts. Now, our last point: what would we expect to happen when we look at tomorrow? Well, until we get a good profile of what's happened overnight, that's a little bit hard to say. But what we can say with a reasonable amount of certainty is that as the market continues to move up, where's it going to go? It's going to go into this direction of the 2031 area as it moves up, because it's going to want to fill in this area of low volume. And then as it continues to move up, that area around 2033 is going to become significant as a potential area of resistance, because once you get beyond that, you're going to drop into an area of low volume again. So we'll have to see whether the market gets much beyond that level tomorrow. But in the meantime, any rally that's taking place is probably going to continue until you get up in that neighborhood. And right now the market's at 2023. So it's way down here. So up we would expect it to go, because it doesn't want to go down any more than it really wants to go up, but it gravitates towards moving up so as to fill in this area of low volume. It works both ways. Low volume below, low volume above, the same is true. It's going to move in that direction. So here, right at this level, at 1768, we would expect it to move in that direction. We may then find some kind of resistance along the way in here, but that's very difficult to tell using this particular chart. We don't have enough data. Not on this chart. And then on the INX, as we move up, you can see we're very likely going to be moving up into this area of low volume and then finding support after we pass through it. Pardon me. We're going to find resistance after we pass through it. It'll try to get through it. So on the YM, again, here's your area of low volume. You can see it in here. The point of control being a nice potential target. So really, this point of control at 17,663, the point of control here on the Dow, 17,791, yeah. Very possible areas where we're going to find the market moving up toward. And 2033, that shouldn't be too hard to reach. It's only 10 points above where we are right now. So depending on what happens in the overnight market, you see, that's going to say a lot about where the market is going to move tomorrow. And we'll just have to see. So that's a quick analysis of the day. We invite you to come and take a look at our charts and take a demo. What we do with regard to the premium, we didn't even discuss today, but it's significant. And so we thank you for your support, and we hope that these videos are useful. Please comment on them, but come take a demo. You'll be glad you did. This is Rod Kusin and Spoon for Risk.